Good morning, everyone. My name is Debashish, and today we'll be talking about the urgent need of mandatory risk communications in the financial world. Let's begin with understanding what is risk communication. Risk communication is about making sure your customers know what they are getting into, what can go wrong before it goes wrong. It's fairly simple. Let's begin with the case of cigarettes. Now, the government controls all communications around the cigarette space, cigarettes and tobaccos to be particular. Advertisements is totally banned. And even with their packagings, it's mandatory for them to have 85% disclosure of risk. Now, that's important. Often these packagings have visuals enough to spoil your morning tea. But I think it's working. You see, I'm sure no smoker ever, lights up the cigarette thinking is their daily dose of vitamin C, do they? It's just government's way of saying, well, we can't stop you from smoking, but we'll let you know what you're stepping into. It's important. It's about letting your customers know what can go wrong before it goes wrong. Now let's jump to the idea of financial markets. What is the warning equivalent in the financial space? I think a lot of audience would probably think of this disclosure right there. But I have reservations around it. Often, these disclosures are read out to you at speed faster than Eminem could. And that's concerning because these disclosures have heavy words in them. Market risk, offer document. These are two big, heavy words right there. I'm not sure if every investor understands what market risk is, but I'm sure there are very few investors who understand market risk in totality. And the offer document. It's like those user agreements we sign up before we install a software. We never really read it, we just go ahead and click on I agree. Let's face the ugly truth here. 93% of futures and option traders are in losses. 7 out of 10 investors in the equity space are in losses. And of all the active traders, only 1% are able to earn money more than what fixed deposits could offer. And let's face it, fixed deposits offer you an interest rate lower than inflation, which means that your corpus invested in fixed deposit reduces year on year. Let's rephrase it. The purchase power of your corpus reduces year on year. Despite such losses, there are no warnings around it. There are no graphic images put into place to let you or make you think twice. And look, if we can put unhealthy lungs on cigarette packagings, can we not think of similar incidents in the financial space? Let's think of an example together. Let's say you're using a stock market broking app, and before you can click on the buy button, it pops up a small message saying 7 out of 10 users had losses today. Or it brings out this message saying this is not passive earning, it's active stress. It's honest risk communications. These are not false informations. And there are campaigns and companies that have done it correct. Mutual Fund Sahi Hai, for example, is a brilliant campaign that used cricket humors, campus events, and small bit-sized information on social media to tell people about the perks of joining mutual funds or investing in mutual funds. In fact, in one of their communications, they actually tell their users, please don't invest all your money into mutual funds. That's very honest. Zerodha, on the other hand, went a step ahead and started a parallel platform called Zerodha Varsity. Now, this platform is dedicated to telling people what are the risks involved in trading. And the best thing is it allows people to do mock trading. Therefore, you get to experience the market before you really invest your money into it. Now, look, investments are not bad. I'm not at all saying that we should ban advertisements or maybe ban investments in totality. In fact, the government wants you to invest. When you invest money into the business, then use it to expand their businesses, thereby creating jobs. And when there are more jobs, there are more income, there's more savings. And if there's more savings, there's more investments. Therefore, the cycle continues and the GDP grows. However, my case here is to make sure that risk communications are equally visible to reward communication. This is a small thing to ask, and if we can make sure that every smoker thinks twice before lighting up a cigarette, can't we make or design systems that make every investor think twice before making or pressing the buy button? All the financial ratios, disclosures are right there. In fact, much like health, wealth is a factor of information, of awareness. and not luck. While we cannot take away the element of risk from investments, we can take the element of negligence. So in its essence, what the Indian traders need is not filtered investment opportunities, but rather what they need is more systemic, clear guidelines and communications, more specifically risk communications, and perhaps a small nudge to make them think twice before they invest into the markets. And that's my case. Thank you.